Good evening, all of you. Let's talk about the trade that we took in Bank Nifty today and the reasons and the logic behind it. All right. So before we take a trade in any instrument, be it indices, be it stocks, commodities, whatever it may be, we first like to know the general direction of the trend, whether the particular instrument is on an uptrend or on down on a long-term basis. So basically, we'll open the daily chart. As you can see, we have the daily chart in Bank Nifty, and we start drawing the zigzag pattern. So I'll take this as the low. So from here the market started moving up. So we start from here, we go up and we look for any retracements. And this is the first location where the market came down to. Basically took a retracement, climbed up again, came down further until the 16th. That is till yesterday. This was the high that was being the trend. Alright. So now you can see markets making higher highs, higher lows, higher highs. Right. Now this day on the 11th, you can see market has made a low which has gone below the low of 2nd of July. So 2nd July low was our last low, right? And on the 11th of July, market broke the low of 2nd of July. So this is giving me an indication that the market might start moving down. It's not a surety because here this only the structure has been broken. There is no formation of a lower high and lower low. Alright, so only the first part of the structure has been broken, where a previous low has been broken on the downside. A lower low has been made. So in this case, 11th of July has made a lower low as compared to the last low which was made on the 2nd of July. So this is giving us an indication that okay, the market might stop here and stop going further up, or it might start moving down, retracing downwards. Alright, so once this has happened, what I would do is that I would mark a position on the chart where I think most of the buyers or rather most of the sellers are sitting. Alright, so this particular candle is where I feel that the sellers are sitting and who are willing to push the price further down. And I'll put a fib retracement over here, and as long as the 50% level of the fib of this particular candle of 3rd of July is not broken, for me the market is moving downwards. And as you can see, after the 11th, it's struggling over here in this area. It's actually struggling in this area. Okay, it's not able to go up. So for me, this is the position where I feel the market would halt or the market would reverse the trend from this particular position. Alright, so let's mark this as our resistance zone. Okay, so then we go on today's chart. We open the chart on a 5-minute basis. So let's go back again. We open the daily chart. We see what's the general trend, where that particular instrument is moving, whether it's moving up or moving down. We use the help of the zigzag method to understand what the trend is. So in this particular instrument, Bank Nifty futures, we have found out that a lower low has been made for the first time. So we are predicting that the market might take a halt over here, or it might retrace from here. I won't say it's going to go on a downtrend, but yeah, retracement would be a better word. Alright, so once this is done, so I am interested only in shorting the market, not going long. Alright, so now once this is done, as always, we will mark the high. We'll use the red color and the low of the previous day. Okay, so this is previous day high, this is previous day low. Alright, so this I would mark, and this red rectangle that you see over here is what we had marked as the resistance zone. Alright, so today's market begin. It opened below previous day low. Okay, it tried to go down. We are on a 5-minute chart. Tried to go down. Price came back again. Took a small rejection over here from previous day low. Went down. Remember, we are looking to short. Alright, went down. Now over here, I was waiting for a price action to be made before I could short. Right, because just because you see one black candle or a red, this sorry, black candle here, but a red candle at any of your important locations doesn't necessarily warrant for you to take a short position. Okay, there has to be some sort of price action that has to form here before you take a short. So this was the first red candle. Price went further down and then it zoomed up. Okay, it zoomed up. So generally, when price breaks inside from a previous day low or breaks inside from a previous day high after opening here, breaks back in, generally they tend to go to the opposite direction, the opposite range of the previous day. So in this case, the opposite range was the previous day high. So price went all the way up here. So here also we can use the zigzag pattern. Okay, price opened here, went up, with a rejection over here, retraced, went back up again, and then it retraced here. Okay, now I'll tell you why I stopped at this candle. When price went up, came down, and then broke this high that it had made. All right, there was a low that was made over here. Okay, let's just term this as we'll just term it later on. This low was made on the 955 candle. At around the 1010 candle, price went up, broke the previous day high, and it closed above it too. Okay, now this again is giving me an indication that price might want to go further up, but just by seeing one green candle above my important zone, again doesn't warrant for me to straight away jump into a buying trade. Okay, there has to be a price action. Only then one can get into it. Okay, but then again, as I said earlier, we are bearish on Bank Nifty. Reasons already told earlier. So I'm not go on a buy trade even if the market moves up. Alright, I'm looking for a sell trade. Okay, so price goes up, comes down, again crashes down. Here you can see the 1020 candle has made a lower low as compared to the 915 candle. Okay, so the structure was broken out over here. Alright, so there's a break of structure at the 1022 candle. When this happens, I need a zone from where I feel the market will start, where price will again go up to find rejection and fall from there. So basically a location where sellers are sitting. Okay, so when this candle was formed at 1020, I marked this level, waited for price to come here, okay, and I shorted the market. Okay, because see, as I told you earlier, a certain price action has to form from these are my important levels: previous day high, previous day low. All right, I have made a hypothesis that Bank Nifty is weak, so I will only take a sell trade. All right, so obviously over here no price action happened. Price went up to this level now. Now over here I would wait for price action to happen to give me an indication or a sign that market wants to go short from here. Alright, that happened at 1020. I marked this candle up, waited for price to go up. As soon as price reached this level, shorted. I told this on my Telegram as well as on my Twitter channel, and we rode. I got around, I think it's around 310 points or something, but if you can see, price went all the way to nearly 388 points. I got around 310 points now, which I'm very happy with. Right? So I hope you folks understand my logic and my reasoning. Why I was waiting to short Bank Nifty and why I took a short position at this particular place at previous day high. Right? So go through this video once or twice. You- If you still don't understand why we took a trade or how we took the trade at this location, drop me a line and we can discuss further. Cheers.